Hello guys, welcome to KeenFX Academy YouTube channel. My name is Akin Lakin. I am the lead instructor. If you are new to this YouTube channel, please after the end of this video, if we deserve a subscription from you, please don't hesitate to do so. And if you are a returning subscriber, I welcome you to this video. So in this video, I'm going to show you the strategy I use in entering this trade, which is the double bottom strategy. I'm going to show you the best way to trade double bottom in trading volatility markets, either volatility 75 or volatility 100 or volatility 50 or volatility 10 1s, even boom and crash. This step in this strategy, this pattern is commonly occurring in any forex market. So what the double bottom, how the double bottom strategy always occur, you may have been hearing this double bottom pattern, um double bottom and double top. So it works as same, just that the double top occur at the end of the uptrend while the double bottom occur at the end of the downtrend. So how do you spot this double bottom or double top very quick and make advantages of it for swing trade? So that's why I make this video. Just stick to the end of this video. I'm going to explain everything in details. So guys, as we all know, this is the principle of double top and double bottom. This is how they work. Assuming the market is in downtrend, it's continue creating a low and low high, low. At the end of the trend, you will see that after a low and it creates a low high, but the market failed to create another low, but instead it reverses back. So that is where we spot it. Let me do that very clear. Let me find a space and do that very clear. I want you to get something. Okay, let me use here. So assuming the market is in downtrend, low high, low high, and the market form a low and form a low high, but it's fail to create another low. Instead, it gets to the previous low and price reverse back. That is where you get your double bottom. And when we are talking about double top, when the prices form a high, low high, low high, and it creates a high, creates another low high, but fail to form a new high, and the price reverse back, that is where we get our double top. So how do we make advantages of this? How do we spot it in a rate chart? So guys, let me show you the trade I'm on now. You can see this is a double bottom. You can see, sorry guys, let me, so this is a double bottom. The market creates a low high here after this low, but fail to form a new low. Instead, the price reverse back. That is not all, guys. So you can see that same thing happen here. You can see it here. Same thing happen here. So now let me zoom the chart and see. So how I enter the trade. So this is the double bottom. So after the price creates this low high, after this low, it forms this low high, then fail to create a new low. Instead, the price continue reverse movement. So now, where I find my entry is when the reverse happen after it create the second top bottom. So and I see something like rally here, which is, let me say, low high. It form a low high which show the market is going up. Then I find my entry around there. I enter after the close of this candle. I enter at the close of this particular candle. You can also spot a rejection in this candle, which show a continuation pattern, which show the market is going to continue after this little retest. You understand? So then I spot my entry here, and I place my stop loss at the close um at the open the highest low of that candle, the lowest low rather. So the candle, we have wick, we have body, and then we have wick. So at here we have open at the bearish, that is the bearish candle. We have close, we have high, and we have low. This is the high price. This is the highest price that the price touched for this particular candle, and this is the lowest price, which is HOCL. HOCL, high, open, close, and low. So that is what made up of a candle. So you see this particular double bottom and double top pattern is usually happen in all time frame. You understand? It's commonly happen in all, but the valid one happen in higher time frame, like for like 30, 1 hour, 4 hours. So if you want a swing trade, you should enter from 4 hours. If your capital, if you have a much in your capital, you can see I entered this in a 4 hour, and you can see the amount I'm making now. You understand? So and this is the first target, because this is where the neckline is. When the price here, when the price gets to this level, there's going to be a little retest and break it and get to this level. You understand? Because this is there's a structure here. You understand? So some people, there are different ways you can use to enter for double bottom or double top. So some people usually wait till the price break this neckline. You understand? But some aggressive trader always enter when they spot the second bottom and they can see any bullish candle. They will enter at this close of this first green candle here. That is how some aggressive traders. But me, so I used to enter when I spot a little retest from this after I confirm the second bottom or second top. Then I see that the movement after that, I can spot a little retest or a rally there. So then that is what gives me an entry. Then I will now target the neckline as my first TP. So instead, when some people will wait till this neckline, not even some people, that is the safest way, because you have to confirm this is a real double bottom. When you get to this neckline and you break it, then you enter after the close of the candle that break it. Then your stop loss will be a few pips below that neckline. So that is safest way. So you can see, let's see whether we can spot some. And also, if you are finding a double top or double bottom, this is something I want you to know too. So after the market continue like this, assuming the double bottom and it creates a low, it may work that the second top or bottom may not equal to this first one. It's very possible, and it's safe like that. It's okay like that before it continue. You understand? But if the second one break the last low or high, that is the pattern is cancelled. Let me say that again. When the price is coming and you are finding a low and the second bottom that make it double bottom doesn't get to this level of the first one, is still okay. You can assume it as double bottom. But if that second one break the first low, the first bottom, cancel the pattern, it doesn't work, because it has break the low. It tells you that this trend is going to continue because it has break the initial low. And if you are trading the double top and you see the market continue and it form a first top and the second top didn't get to the first top, is still okay. But if it break it, cancel the pattern. You understand? You should cancel the pattern, because the trend is going to continue. You understand? So that is that on double top and double um bottom. So let's do some back testing. So let's see whether we can spot. You can see this one here. This is another double bottom. So if I want to enter here, wait till this neckline broken. You can see what I'm trying to explain. This is the candle that broke the neckline. I will enter from here and put my stop loss here. Then I will target here as my first TP. Then I will put my second TP at this structure here. You can see that the two TP smash. You can see that here. So that is how this strategy work. It is very effective. You can see this as double no, that's what I'm trying to explain. You can see this as double top, but I won't ask you to enter here because the second top break the first top. So I would say you should not use it, though it's usually continuable, but it doesn't normally happen that way sometimes. So you should just, to be on the safer side, you should just leave that. You can see this one. I can consider this as a double top. You can see the price touch here and it's come back to touch the weak touch here, but doesn't touch the initial II. So when you just line this thing, you will see that this is where the close of this retesting, and the air we it will be here. But to me, I will consider it as double top because price get to this level before it get the rejection. You understand? So I will consider it as the double top. Then I will also trade that. You understand? So that is that. If you can spot the double top and double bottom, you can see this one too. So this is another double top here. So the price touch here first and then come back to touch it again. So you can find your entry. You can find an entry here. You see that when this neckline got broken, it retests. You understand? Sorry for that. When this neckline got broken, it retests, then it continue. Some trader used to wait to this for this retracement before they enter, while some we enter after this neckline. The candle that broke this neckline, they enter here and put their stop loss around here. So depend on your entry, but that is how to spot double top and double bottom. You can spot that in any market, either boom and crash, volatility, currency pair, any market, step index, range and jump, any market. So just make sure your confirmation is clear. So if you have any other question, drop it on the comment section. That is why the comment section is always open. I will try to attend to it. So guys, don't forget to subscribe to this YouTube channel if you have not done that. I wish you happy trading and trade responsible. Thank you.